Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Ira Epstein with your financial market update, and we are now on Thursday, the 2nd of August, 2018, getting on to 4:45 p.m. Before the boards fully disappear, I'm sorry, my timing was right there. We had a reversal day back to the upside in the stock indices. The metal markets got slammed. The gold, the silver, the copper down again sharply. The dollar had a big rally today at the expense of most currencies, and we were able to hold together to a degree in a number of the energy markets. Now, before I get involved in the charts, I am taking a vacation. I need a vacation. It's been a long time. And I'm not taking a day off. I'll do that during the course of the year, and you know that, and I'll get the flu like anybody else. But I'm taking a real vacation. I will not be on these videos now until August 13th. So this is the last one until August 13th. Fly back August 12th into Chicago. I'll be in my studio. I'll be recording. I'll be refreshed, and it's important, at least to me. If you take a look at the S&P 500, you can't get away from the fact this market just keeps trudging higher, obviously trying to make and see can it get up to the old highs that it made right at the beginning of 2018. In terms of the price action today, super important on a daily basis. You have a huge outside day up. So what I would not want to see while I'm gone is this low taken out, especially on Friday or Monday. That would be bad news for the market. As it stands now, when I put the swing line on, I've got a lower low and a higher high. Clearly, the resistance area is coming in right through that number. The market fought a battle, and it's still fighting it, at the 18-day average of closes. Want to take a look at that? Today, yesterday, day before. So my theory is often, the word always will not work. Often, markets retreat to a point on a chart, and I believe it's a key moving average. Can you use a 20-day? Can you use a 19? You can use whatever you want. I like the 18. And on that number, from there, generally you get these whipsaws as the market tries to set up a new trend pattern. And the word is trend. I think it often tries to go into a trend. The problem for the S&P, I'm not sure it can do it. You've got the upper Bollinger Band now at 2843 for all purposes, the lower band 2778. I think you're stuck in here for a bit. You'd blast out of it and go to the moon if all of a sudden China and the U.S. actually had real trade talks, and of course the afterburner would kick on if a deal was made. No trade talks will keep frustrating the market, and you whip around back and forth. Momentum, the market worked off. It's done. Worked off its overbought condition. It hit the numbers it had to. When you have an embedded reading with both the K and D numbers, the red and the blue going sideways over 80, and you lose it, the market often, like it did here, makes a run to the 18-day average of closes to try to figure out what to do. Does it have to do it? No, but often it does. And here it came down to it, played with it all week, and now it's trying to figure out what next. I'm going to repeat. I don't see the market trending. I see the bias up, period. Look where the NASDAQ fought its battle. The lower Bollinger Band popped back up. Unlike the S&P, this market right now with this close is bullish. Higher lows, higher highs. You'd have to take out today's low, which is an outside day up low at 72.14 to negate it, and the market has put into play the potential of an upper Bollinger Band. It could just fight a battle here for a little bit, but the market's bullish. It's gathered it all back. The Dow is a big laggard. All it did finally, and it took a while. Remember when we lost the embedded reading and I was saying I think this market's got a shot to get back to that 18-day average of closes. And it hung here forever. It took till today and it got down there. Now it's done what I want. Problem for the market is you got the swing line down, prices are over the 18-day average, so the bias is up, the swing line trend is down, and in terms of the slow stochastics, you still have one of the numbers stuck in the 70s. It's overbought. I don't see a darn thing. In the Russell, like the NASDAQ, you now have higher lows, higher highs. Look at the closing price. It is shy of closing over the 18-day average. So the bias is still down, the swing line is up, and momentum is up. If the market starts closing over the 18-day average, don't be surprised to see the market start lifting back up. There's a rotation going on in these markets, and this market's suddenly in favor, while the Dow is the one, from a technician's point of view, out. Interesting day. Remember when we had this rally on the 30th, this Monday, and we got up to the upper Bollinger Band, and I've been noticing something. It does not mean you should do it. It doesn't mean I'm right. But I go back, and every time I'm seeing these upper Bollinger Bands get hit, I'm seeing the market able to come back to the 18-day average of closes. And if you hit the lower band, I'm seeing that same type of thing. So what I think's going on is the pros are selling at the volatility number and trying to come in back at the 18-day average, just like this, like that. Today you got back up to the volatility number. So the traders that get my morning subscriber video, we had this on the screen, and I was saying, I think they're at it, selling it again. By the end of the day, right back down to it. If it drops to the lower band, I think that they'll write puts, trying to get back up to the 18-day average. In the bond market, this market's bearish. You have an embedded slow stochastic. You got lower highs, lower lows. I continue to look for selling on the rallies in this market. You have an embedded reading in the 10-year notes. Lower highs, lower lows. I continue to look for selling in this market. When we get to TLT, let's see if I can get this to come up in a reasonable period of time. There you go. Lower highs, lower lows, embedded reading. Next target, if it keeps going down, 117.66. I'm still bearish on this. Dollar index. We have been discussing the sideways action, and I hate that I'm going on vacation because it could be just when this is going to break out. Hey, I need a vacation. I don't go away more than typically once every year and a half or so. So that's what's going on here. I'm looking for the resistance right here, support back at the 18-day average. But if it wants to break out, it's got everything going for it. You have higher lows, higher highs, momentum up, bias up. You got to start pushing that band at some point or fail, and you'll fall back to the 18-day average. The bulls grabbed control. Not necessarily so in this market. I was looking at this. Look at this high of this day. 117.87.5. Then we drop down, so that's a swing line high. You then get a rally, and you get yourself up to the 117.90. So now you got a higher high and a lower low. And while you're pulling back and trying to act like what the dollar index is doing, it's not the same. You're oversold in the market. You don't have a trend going. That doesn't mean you can't push it out and drop this market away. I am going to tell you this whole action right here is going to either be a base or a top, and it's going to be a heck of a move. The same thing in the pound. Would you think you're down today 107 points when the Bank of England raised its interest rate? What's happened is the bank took away all the good from it when they started talking Brexit and all the fears and what it can do to the economy, and the market listened. So you have a downtrend in a market that the next objective is 130.30. It just missed it today. That's the lower Bollinger Band, and momentum is still down. In the end, it'll take nothing to get bearish again. To get bearish, all you need to do is close back under the 18-day average of closes. If you do that, you've already got the lower highs, lower lows. You got momentum down. That would give you your bias down. So watch tomorrow. You did it theoretically on the close already. So I don't want to give you the opinion it's not there, but by 0.4. In Bitcoin, we've been talking that since this slow stochastic lost its embedding, and we can come to it right. This is it. We were looking for the 18-day average, prices to get back to it, and I don't think I'm too far off on that. The idea of momentum is you learn to work with it, and that's one of the keys. As you can see in the Brent versus WTI crude, you're still pushing the prices together. The lower this goes, the more the prices come together. And as you can see, even though you had a nice rally back today in the October Brent crude, so what? You took out previous lows. You got a higher high and lower low. Maybe the 100-day average is coming into play. Momentum is totally flat. WTI crude, and I've gone to the ox, so we're talking both same contracts, higher high, lower low, at least back over the 18-day average, and much clearer picture that it's the 100-day average that the traders are looking at. Gasoline. We have talked together. When the market first got down, I said, well, if that support holds, it's great. If not, look for the 100-day. And today the market said, I can handle it and come back. Doesn't mean it's turned a trend, but take out today's high and close over that 18-day average, and at least for the moment, you'd have a pattern of higher lows, higher highs. Got it? So that could be important there. And look at natural gas. When the market got up here this week, we were saying, in fact, we said it on this day, if it continues to rally, maybe the resistance of the 100-day average in the upper Bollinger Band will be enough to curtail that. You got there, you pulled back. Where do you normally go? To regroup, the 18-day average of closes. You regroup there. You're in an uptrend. You've got the higher lows, higher highs. You got a heck of a lot of risk because you'd have to risk roughly, what, 600, 700 points. Not terrible, it's there. If the market holds here, the next resistance, back to the upper Bollinger Band. It's exactly what you did today. I advise while I'm gone, take advantage of the rest of this summer and take my charting course. You get the free charting software. That's a $70 a month value. You're going to get my market research, access to my webinars that we hold, you'll come into them, access to the morning subscriber video, and access to my twice daily reports. That's another $60 a month value. The whole course is $129.95. It's all online. Why not take time, learn something? In the meantime, I'm Ira Epstein, wishing you all a good time. I'm going to have one, and I will catch you on August 13th. Take care now.